Hello everyone, and thanks for checking out our channel, where it's our goal to create a community of informed traders and investors by sharing technical analysis and collaborating together to ace the charts. We look forward to working with you, so let's get started. Looking at SPY on the weekly time frame, and our last lower high was at 280.40 before falling to our low here at 233.76, and then we've been watching this bounce play out for several weeks now. The bulls have managed to gain the support of the 12 and 26 period EMAs as well as the middle Bollinger Band, but we now have a bit of an indecision candle here with a small body and equal sized wicks on the top and the bottom. This upper wick of profit taking is due to some daily consolidation. Notice that we've also got a bearish cross of the 12 and 26 period EMAs. Let's take a look at the daily time frame. On the daily time frame, you can see the consolidation of the last 3 days before holding this 12 period EMA as support. Our last high or low level of support on the daily time frame is 261.79. So as long as the bulls maintain support of 261.79, they keep control of the daily chart. Notice that we also have a bullish cross of the 12 and 26 period EMAs. Our resistance level is up here at 273.44. And then above that, you can see our weekly resistance at 280.40. Let's take a look now at the hourly chart. On the hourly chart, you can see that we were in a downtrend of lower highs and lower lows. We set a low at 267.83 and then broke through the last lower high at 270.25. So in order to change the trend here, the bulls will need to pull back, set a higher low compared to 267.83, and then break to a higher high. They would also want to get above this middle Bollinger Band and maintain that as well as the 12 and 26 period EMAs as support. If we pull back and fall below 267.83 support, we will then look for further daily consolidation. I'm going to zoom into the 5-minute time frame now, and let's see how this bounce played out. If you follow us on Twitter or in our chat room, we mentioned on Friday that we were watching for the potential of this inverse head and shoulders pattern to play out, with our left shoulder, the head, and our right shoulder right here. As we broke this neckline, that was the go-to signal for the bulls. Other signals on this bounce: the bullish cross of the 12 and 26 period exponential moving averages here, and then maintaining those as support, and then establishing the 5 and 15-minute uptrend. So all of those things combined, the bulls were pretty comfortable making an entry here. After establishing a 5 and 15-minute uptrend, we then look to the hourly chart. Up here you can see this was our resistance level, the last lower high on the hourly chart, and you can see the last 5 minutes of the day. Look at the volume on this candle. We broke through that resistance, and so now the bulls need to set a higher low on the hourly chart and change that trend. Let's take a look at XLK, or the technology sector. XLK on the hourly time frame, and you can see that the bulls have changed the trend. Here's our low, 67.05. Our lower high was here at 67.52. We then set a higher low and then broke to a higher high. So our resistance level to watch was the high of the day at 67.97, and our last higher low is here at 67.15. So that's the range we will be watching going into Monday. The 12 and 26 period EMAs are just about to cross bullish, so the bulls will need to maintain that as support as well as the middle Bollinger Band. Let's take a look at XLF, or the financial sector. XLF on the hourly chart, our last lower high is at 25.81 and our low is at 25.34. Anything on this bounce less than 25.81 is just a lower high. Notice that the bulls are just meeting the resistance of the 12 period EMA here. In order to change the trend on the hourly chart, they need to set a lower high compared to 25.81, pull back, set a higher low, and then break to a higher high. Let's take a look now at QQQ, or the NASDAQ 100. QQQ on the hourly, our low was at 166.58. We then set a lower high at 167.59, pulled back, made a higher low just barely, and then broke to a higher high. Our last higher low level of support is at 166.62. The bulls will want to maintain that on the hourly chart. And our high of the day is 168.51, so that's the range we will be watching. We will be watching for a pullback here to set a higher low above 166.62 and then break to a higher high, preferably breaking above this middle Bollinger Band. Let's take a look now at IWM, or the Russell 2000. IWM on the hourly chart, the range we were watching on Friday was the low of 148.40 and the resistance of 149.89. You can see that we pulled back, set a higher low here, and then bounced and were unable to break through the resistance of 149.89. Notice that the middle Bollinger Band is currently acting as resistance as well. If we can't break through that resistance, we will look for a tightening equilibrium pattern to form. And our last lower high is at 148.50. So we'll be watching for that tightening equilibrium pattern if we cannot get a bull break here. Let's take a look now at VIX, or the volatility index. Looking at the VIX on the daily time frame, and you can see that we are making lower highs and lower lows. We had a bit of a bounce here, but we met resistance of the 12-period EMAs, and we currently have an inside bar here on the daily time frame to watch. Let's zoom into the hourly chart. On the hourly chart, you can see that we had a bull break here, pulled back, set a higher low, but then we made a lower high and fell to lower lows, losing support. So the bears are in control of the hourly time frame on the VIX, and as long as that remains, we will look for the bulls to keep control of the SPY hourly chart. Let's take a look now at US oil. Oil on the daily chart, we have a low here at 51.31, and then we broke to a higher high all the way up to 55.72. We started to consolidate, and then on Thursday the bulls gave back way more than they wanted to, dropping all the way down to 51.77, and then we had a bit of a bounce on Friday. The bulls are trying to hold this 26-period EMA as support if possible. Let's zoom in to the 4-hour chart. On the 4-hour chart, you can see our low here at 51.77. We then set a lower high, pulled back, set a higher low, and then broke to a higher high before meeting the resistance of the 12-period EMA. The bulls will now need to hold 52.06. So if they pull back, set a higher low compared to 52.06, and then break to a higher high above the 12 and 26 period EMAs and the middle Bollinger Band, that would be ideal. Let's zoom into the hourly chart. On the hourly chart, the range to watch is from 52.18 to our high here at 52.98. So that's the range I'm watching, and you can see that currently we have support of the 12 and 26 period EMAs, and the bulls will want to maintain that if possible. Let's take a look now at natural gas. Natural gas on the daily time frame, our last lower high is at 2768, and our low is at 2594. We've had a little bit of a bounce. Let's zoom into the 4-hour chart. On the 4-hour chart, you can see our low at 2594. We then set a lower high at 2646, pulled back, set a higher low at 2602, and then broke to a higher high. So our range to watch is 2602 to 2662 currently. The bulls will now need to establish a higher low above 2602 in order to maintain the 4-hour uptrend. Let's zoom into the hourly time frame. On the hourly chart, you can see that we had inside bars and a bull break with 5 green candles in a row after that, and now the bulls are sitting comfortably above the 12 and 26 period EMA as well as the middle Bollinger Band, so they will want to maintain that as support on any consolidation. Ideally here, the bulls will want to consolidate hold the 12 and 26 period EMA as support, and then break to a higher high. And then that would give us a bullish cross of the 12 and 26 period EMAs on the hourly chart as well. Thanks everyone for checking out our channel. If you find these videos helpful, please click the like button and subscribe. Our goal is to reach 1,000 subscribers so we can continue to create more free content. Also, if you are interested in helping us build a community to collaborate together, click the link in the description of this video to sign up. It's free to join, so do it today and let's work together to ace the charts.